Hey there, listeners, and welcome to the Dairy Monday Market Watch. This podcast is put on by Cornell Cooperative Extension's North Country Regional Ag team. I'll be your host. My name is Kelsey O'Shea, and I'm the Farm Business Management Specialist here in Northern New York. Each week, we're going to talk with a market specialist about what's happened over the past week, what's coming up ahead, and how these events may impact your business. So be sure to stay tuned and check back with us each Monday. If you're not already, make sure you follow our YouTube channel. We are CCE North Country Regional Ag Team, or follow us on Facebook to see these updates. This week, our market specialist will be Anup Singh. He will be much better at giving his background than I ever could, so I'll turn it right over to you, Anup.
Thank you. Thank you for having me. So my background is, my name is Anup. I am married into dairy. I met my beautiful wife in Houston, where I was working in the energy business. So was she. And her parents are dairy farmers in Vermont.
So you got your introduction to dairy from your wife. How did you transition that to your professional career?
So I came home and my brother-in-law said, hey, you work in the oil business. Can you help us manage the price of diesel? What does 2 cents change in the diesel price do to your gross margin? And naively, I thought everybody should know the answer to that. It's only later I realized that it's a difficult question to answer because you need a lot of information, and farmers love farming way more than they would like to follow prices. And that's sort of what got me sucked into dairy. And the more I dug into it, the more I thoroughly enjoyed it, to the extent that I left my career in oil and energy. And I moved halfway around the world to Singapore to work in agricultural markets. I worked a lot in palm oil and soybean meal, understanding just how agriculture actually worked. I could not find anybody in the US to give me a job in ags. There was a company in Singapore that offered me a job, so I moved to Singapore to work there. 2015, Gretchen moved back to Vermont to spend time with the family. I commuted for a year between Singapore and Vermont, and then I went to work for Agrimark as in hedging and risk management. I was there till end of 2017, because I realized then is that the skills that I have and skills that I've picked up, and how I can employ stuff that I know for a broader group of people and businesses. Right. I could do that by working for myself. So I left Agrimark, and I started working with some farmers up in the Northeast. And at the same time, I got an opportunity to be an intern in New Zealand, in Fonterra. So I just thought that would be such a cool experience to get to understand how the world's largest dairy cooperative works. More importantly, how do the global dairy markets actually work? And that was a phenomenal experience for me to sit in that business and guide their risk management trading team on how prices relate and how prices behave and how macroeconomics works. That's really what I do, and I help people in the commodity markets make buying and selling decisions. That's my background.
We will jump right in. We have a few questions that have come from mostly farmers that I've been talking with in the last 5 to 10 days, given everything that's going on. We're in the middle of a global pandemic. In the Northeast here in New York specifically, we are being hit particularly hard due to the large concentration of people in New York City. We have the highest number of cases of any state in the U.S. So last time we really covered what dairy demand might do within the next 6 to 12 months. And the basic moral of the story was that in the realm of butter and those sorts of products, we probably will see a significant drop in demand. And in the realm of cheese, we might see a more moderate drop. With those two factors in mind, Anup, can you talk to us a little bit about what happened about a week and a half ago between Friday and Monday when we saw markets limiting down as far as milk is concerned, so actually dropping so low that we stopped trading? Can you talk to us a little bit about what caused that, what you think that means, and any other implications of that event in the market?
Good question. What we'll do is, off air, we were chatting and I said, I'm going to use some round numbers. So please fact check, and I'll probably be wrong. You think about it. So anyway, not think about it. So before that, Friday, when the sell-off started, what caught my attention was that I saw the sell down happen, and it just relentlessly kept happening. Then the next thing, we are trained to look at is where is the selling actually occurring. So if you open up the CME webpage and you look at, all the contracts, what you should also pay attention to is which months are getting sold, right? Which contracts are getting sold? Where do you see red? And if there's a red, look at the volume column and see if there's volume on the column.
Okay.
And right, if there is selling by farmers generally or people concerned in the most immediate term, they'll be selling in the front 3-4 months. They were selling in the deferred months. So in other words, they were selling in first half 2021.
Okay.
So selling first half 2021 is when that happens, the hunch that people like me will get is, well, this is some institutional selling.
Okay.
So which institution is selling? And my first initial gut was, well, I hope the reinsurance guys who have been selling DRP protection to the farmers, they are not offloading their risk in the marketplace given the sharp change in demand profile.
Okay.
Right? That was my first gut, and it was wrong. I hope it's wrong. Because then I thought about it. I'm like, well, the president is doing a lot to reassure the economy by stimulus packages. Why will somebody involved in the insurance program want to go dump, risk in the market when USDA, under whose preview all this work happens, and I said, even if they were doing it, they won't get away with it. So I don't think they're doing that. And as the weekend went by, then I started thinking, hang on a minute, Friday, and then Monday when the sell-off happened again, hang on a minute, this is end of the quarter.
Got it.
End of the quarter. So probably the commercials, and I'm not saying these are the commercials who are selling because I have no clue. But let's just say this McDonald's, Burger King, anybody who uses cheese slices or has exposure to cheese as a cost for them, they probably revise down their sales forecast for, sales in their stores. And these guys will go hedge the cheese price 12, 18 months out. And now you revise down your forecast, which means you've overbought cheese. Right. So now you need to go sell what you overbought. And if you have to sell, you take as much bad news as possible in one quarter. So take all your losses in March.
Okay.
So that's my initial sense is probably what happened. But then what this is also exposing something interesting to us is when we talk in terms of recovery or as my friend in New Zealand, in Australia, Steve Spencer called it, staggered restarts. So what we were debating, Steve and I were debating all of the weekend was, okay, what is a staggered restart? How bad is it? And McDonald's and Burger King and these type of companies, what do they think is demand returns and to what level and by when? Are we thinking it's a end of June thing? Are we thinking it's a September thing? Does it go back to 100%, meaning where it was December in June, or does it 80%? Whatever that is. So there'll be some selling, some burst selling like this. I think, towards the towards the end of these quarters. So what is this selling actually? So I think that's one part of it. The second part then is these types of buying and selling decisions then have some knee-jerk impact on how the prices move on the screens. What then we need to think about is, what does recovery actually mean? I was testing this on my sister. She lives in Toronto. She's got 2 kids. And I asked her, is that when will you send your children to school? Because I was really curious about figuring out what is the exit strategy for something like this. And I said, what will make you send your kids to school? And she's like, that's a good question. I haven't thought about it. I'm like, what do you need to see in the newspaper? And she doesn't know what she needs to see to send her kids to school. I asked a question to somebody on my team day before yesterday. I'm like, hey, do me a favor, go ask your wife that if Anup asks me to get on a plane to go to London to meet a client, will you let me do it? And he says, she's going to say, no way. You're not getting on a plane. I'm like, exactly. So then I was talking to a friend of mine who runs a business like I do. And I said, Eric, so what is going to make will you in your right mind ask Austin to get on a plane tomorrow? He's like, no, man, I can't do that. I'm like, So Eric, what we're saying is people like you and me actually will get on a plane because it's our business. We are the entrepreneurs. We will get on a plane to go make business happen, but we will not ask in any conscience anybody working in our businesses to get on a plane and go someplace. He's like, no, we can't do that. Well, so when then you and I in our day-to-day lives think about, okay, what does recovery mean? We need to test it on ourselves a bit. Like, what will make us send our children to school? So unless we don't feel comfortable sending our children to school, why, that's what will take recovery to happen.
Right.
I mean, as we were saying, 150,000 people in airborne versus 2.5 million airborne. What is going to take 1.5 million people to get on the plane?
Yeah. So,
go ahead.
So with that, there's a lot of people that are talking about closing. I mean, there's a lot of states that are closing school for the rest of the year. So then, I mean, are we talking earliest recovery minimum of June?
When yes. Correct. Yeah. Correct. Okay. Absolutely. Minimum June or September or, whatever, however long it takes.
Okay.
Right. I was testing this with a friend yesterday and I don't know, friends, I have a lot of people I know in the industry and I talk to them a lot because I try to get pulse check, sense check, how the sentiment in the marketplace is. And the question was asking like, hey, Austin, so do you want to go get a beer? He's like, no, I don't want to go get a beer with you. But then he unpacked it a bit and he's like, well, I would love to get a beer with you. And I know that you are safe, I'm safe, and we do our whatever we need to do. Mm-hmm. But I think if you and I are seen together getting a beer someplace, well, first, we can't get a beer anywhere. But let's say if you were to, the society around us will think of us as some really reckless, irresponsible people. So he's like, we have to overcome that social association as well. Right? Yeah. So there's a lot of hurdles in recovery.
Right.
Now, having said that, go ahead.
I guess I would argue as well that people seem to be, and maybe it's just given that we live in this really connected internet age, they are quite savage about their judgment of not obeying the rules.
Correct.
Much more so than maybe perhaps I would have even thought, I guess.
Yeah, absolutely. So from a demand standpoint, then, I think those are some impediments to the pace of demand getting where we were used to seeing the pace of demand to be. On the flip side of that, I think is companies and co-ops and supply chains that can adapt to this new demand pattern of, cheese in the stores. You and I can get cheese, buy dairy products, buy whatever we need to get in the grocery store. Because I think we are now moving back to, eating more at home than eating out, or food getting delivered. I think that brings a different type of demand back.
Okay.
Right. So that's a good part of it. But pricing, the question you asked me, is pricing has a few other things to solve for. Is what we do have some analogs to go compare is what happens when incomes drop, right? And incomes drop, people don't stop eating, they just trade lower and they buy cheaper food. So, which is where I say the supply chain needs to be more responsive, is if somebody was eating a nicely packaged, smaller cut form, ready to go eat food, but they were paying 2x as much. I think when people lose jobs, they don't pay 2x as much. They probably will buy an 8-ounce bar of cheese way more than they will buy some shred. Right. So that adjustments will happen and they will happen very, very starkly. And there's a graph that got tweeted yesterday of unemployment claims. It was 10 million or 6 million unemployment claims, which is the highest ever since recorded history.
Right.
Because of, of 150 million workforce, 10%, which is roughly 15 million people, work in hospitality and restaurants. They all grounded. Right? Think about every day the baseball game doesn't happen, how many people don't get a living. So that loss of income is going to show up someplace. And I think it's going to show up in pricing.
Okay. That's an interesting way to think about it. I would not have necessarily thought about it from the pricing perspective of that loss of income. But
yeah. So, and I will send you for the fun of it, and you can feel more than happy to share it. So one of the things my team studies is consumer spending, and from Bureau of Labor Statistics. So it's freely data is free. There's just no cost to it. We just put a little analysis on top of it, and we study what happened. And what we were studying last few days was, hey, so what happened in 2008 and what happened in 2001 and what happened, some of these times. And first, let me also say that there is no analog to this.
Okay.
I've tested this now with several people is, did you know in 2008 that the market was crashing? And very few people said yes. They didn't not know market was crashing. People like me who spend time on the screen and working markets, I mean, I would argue to some extent, even people like me that catch up in 2008 when the market crashed. Because it didn't crash overnight. Well, this time, we have Twitter, we have Facebook, we have TV, wall-to-wall coverage. Everybody knew blow by blow what was happening.
Right.
We didn't know that in 2008, number one. Number two, 2008 and 2001, there wasn't a clampdown like this. We weren't living inside our basement. Restaurants were open. Things were moving. Right now, nothing is moving. Or very little is moving. So we can't, there is no analog to compare. You have to use that imagination a bit to think about, how to think about, what is changing and what's not changing. So having said that, what we did study is like, well, again, calorific demand, mouths to feed, people will not go hungry. They might eat cheaper. So we studied, spend in different categories, and I'll send you some of those, some grids, and you will see that all I have at the moment is a spending, and spending goes down and spending recovers. But what really that means is people are trading things down.
Okay.
Like the sales that go to zero in these times is clothing sales. Apparel sales go to zero. Nobody buys any furniture. New car sales go to zero. All of those things change because that money gets reallocated to the basics. Healthcare spending doesn't go down. And I think we will see probably slightly higher healthcare spending. Insurance rates will probably go up, things like that. So where is that money going to come from if you don't have income? Well, it's going to come from making cheaper choices in things that we can choose. Working from home, people can't give up cell phones and broadband. I think that money, unfortunately, is going to come from eating cheaper food.
That's interesting. Okay.
Now, some of that money may also come from spending less money on gas.
Well,
because
right.
Nobody's driving, right? I mean, miles driven should be falling, like precipitously. So not money spent on gas, but I think people will save on food as well by eating cheaper.
Okay. That's a really interesting way of looking at it. Thank you for sharing that.
My pleasure. Now, one thing I would say, we've been painting doom and glooms, and I keep saying doom and gloom. I do have a flip side story as well.
Oh, good.
And there are two flip side stories as well. And this is something. Now I'm an immigrant to the country, and I came here in 1998.
Okay.
And I have to say that, and I became a naturalized citizen of the country, and it is only in America, I feel, that you can have a dream and you can make the dream happen.
Wow.
Right? It's a huge thing. And even though I was not born here, I spent last 20, 25 years here. Certain things about us as people in this country, there's a few things that are important. The American spirit is probably by far, today, I would say more than any other time, all eyes are on us.
Okay.
Whether we like it or we don't, it doesn't matter what our politics says and everything else. I think Americans by far are probably the most accepting people. I can say that because I came here. And so we have three important emotional, spiritual, spirit-based mile markers in front of us.
Okay.
Memorial Day, July 4th, and Labor Day. And I do feel that somewhere between these three things, we are going to say, you know what, to heck with it. We're going to go out and we'll accept the eventuality, and we're not going to let all of this impede how we live our lives. Now, this is an extremely reckless thing for me to say this, extremely irresponsible, reckless thing for me to say this. But right. I also feel it's a pretty controversial thing. I'll say that having grown up in India and other places, you see, unless we hear the word vaccine, containment, cure, prevention, this virus is not going away. Okay. I think the virus claims as many lives it has to claim. And hence I say there is no analog to this because you cannot compare loss of human life to loss of GDP growth. They just cannot be compared. So hence, I don't think this situation has occurred before. All of us are doing is trying to look at economic activity and compare this, that, and the other, but no, there's no price to human life. So I'm not arguing that at all. But what I'm also saying is that, and I know nothing about epidemics or pandemics. What I feel is that, let's assume for a second that we are unable to prevent at the end the total loss of life. What we are doing is we're just making sure the hospitals don't get overrun and our healthcare staff doesn't get completely overrun
Right.
in servicing us as we go through this pandemic. And so that notwithstanding, how do we get back to this normalcy thing? I don't think it's going to be a rainbow comes out and President Trump will come and say, look, the rainbow's out, everything is safe, leave your homes.
Yeah.
Right? That's not the exit strategy. I don't think that'll happen. It'll happen with, Kelsey, you and I exercising a huge amount of constraint, restraint, going out, keeping distance, doing what we need to do, adapting these day-to-day measures that we need to adapt and get back to how we were living life. And that's what I mean by, we can say to heck with it, I'm going to go start living my life again. Doesn't mean I'm going to go be reckless, but how do I take some of these choices I've made, but then start to return to some sense of normalcy? I think that's one thing. That's a big thing. And I think all eyes around the world will be on us to show that leadership. Like that's one. Now, the second part, there is an analog to that. And this is a very crazy analog, but there's an analog to that. Is, there's a reason why it was called the Roaring 20s. And the reason it was called the Roaring 20s, right, is because we survived two things. We survived World War I and we survived the Spanish flu. So when we came out of this, surviving those two things, everybody said, I almost came almost close to extinction. And I've been saving all this money. I've been doing all this. You know what? To hell with it. I'm going to spend more time with my family. I'm going to go take my family, go places, show them things that otherwise it helps you reevaluate it. It was the Roaring 20s.
Yeah, that makes sense. All right.
So what I'm saying is that there is life on the other side of this. It has to happen. I mean, we're humans. The part of being humans is we are all speculators. We're all speculators, and we speculate for something better. And with all this technology and everything at our disposal, how can we not be on the other side of this? So we will be on the other side of this. It may look very different, humongously different than what we knew last year, what the other side looks like. So there is another side. The question is, how long does it take? And hence my point where the sooner the price goes down, the less people get hurt, and we get on the reconstruction path of it much sooner than the other side.
Thank you so much for joining us today, Anup. We really look forward to speaking with you again soon. As a reminder to all of you out there listening, we will be having these discussions weekly to cover topics about the market as they emerge. These times are changing really quickly, so we expect the topics to be very diverse from week to week. Be sure to check back with us.
Thank you for having me. Have a good day.